If you want to trade or you are trading cryptocurrencies, forex trading, indices or futures or any financial market, these candlesticks that we are going to be explaining are the only one that you need in the market. Welcome to the Trading Focus once again. Hope everyone is doing good. In today's video, we are going to be explaining all the candlestick patterns that you need to confirm that you are going to be entering for buy or sell in the market. That sounds amazing, guys. Subscribe on the channel, leave the comment below, like the video, and I will see you after this intro on today's video. Okay, welcome back. The candlestick patterns are divided into two, a simple patterns and the complex patterns. Okay, so from the simple patterns, this means that the pattern will be formed by one candlestick only. So we are going to be getting one candlestick indicating to buy or sell in the market. Okay, so from the complex patterns are formed, or is the pattern that is formed by two or more candlesticks. You get more candlesticks to give you a signal that we are going to be expecting buying or sell. Entering from that confirmation, we are going to take a look from all different candlestick patterns that indicating buy or sell in the market. Okay, now these are four candlesticks that we have from the simple patterns. Okay, we have a hammer, we have inverted hammer, a shooting star, and a hanging man. Okay, this is a hammer, inverted hammer, which has the bottom, which has the shape. Okay, now let's start from the simple patterns. These are four simple candlestick patterns that we are going to be looking at by indicating buy or sell in the market. So the first one is a hammer. Okay, this one is an inverted hammer, and this one is a shooting star, and we have also a hanging man. Those are four simple candlestick patterns that we are going to be finding in the market. Okay, so what about from the complex patterns? Remember, simple patterns is when the pattern is formed by one candlestick. Okay, from the complex patterns that we are going to be looking for, the candlestick will be formed with two or more candlesticks indicating or signal buy or sell in the market. Okay, from the complex patterns, we have a bullish engulfing. Okay, where we have this candlestick. The first candlestick is a small bearish, and the next candlestick is a big bullish. Okay, so now from this candlestick, this bullish candlestick will be engulfing the bearish candlestick, will be covering the bearish candlestick. I will explain them from the examples. Okay, so we have also a bearish engulfing. This one has the first candlestick will be a small bullish, and the next candle is a big bearish, which is bigger than the previous candle that is covering the bearish candle. And also we have the candlestick here which has a bearish, which is bigger than the bullish. This bullish candlestick with the bearish big candlestick is called harami, which means in the Japanese language means pregnant. So we are going to explain all of that in a minute. So we also have a bearish harami that has a first big candlestick which is bullish, and the small one which is a bearish candlestick. This candlestick is the mother of the bearish candlestick. I'm going to explain that in a minute. Let's move to the examples and even explaining what are these candlesticks indicating from the market. Remember, in the market, we need to predict the direction of the market. If we get a confirmation or a signal, will tell us that we are expecting the market to be taking us from the direction of buyers or sellers. So we will be entering from that by anticipating the direction of the market based on the indication from the candlestick patterns. Okay, now let's start from the simple patterns. Let's start from the bearish direction. So we have a shooting star. A shooting star is a bearish signal. When the market is moving up, okay, we are making higher highs and higher lows. Okay, so from the high, we have the formation of a shooting star. This time, remember, in our previous video, we talked about the selling pressure. So the candlestick left a long shadow on the top. This is the signal that the sellers are going to be expected to be controlling the market. So when you see a shooting star from this area, we are expecting the market to move to the downside. We are expecting to sell from the shooting star. So we are expecting the market to move bearish. So that's where we enter for sell, okay, from this area, anticipating the market to move in the downside. So that's when we get a shooting star as an indication for sell. So now, after a shooting star, we have another which is called a hanging man. This is a hanging man. This is also a signal that we are going to be expecting the market to move in the downside, to move in the bearish direction. Okay, from here, the market also will be moving up. Let's say we are moving up. Okay, so from this area, we have a formation of a hanging man, which indicating that the market is going to be reversing or changing the direction to the downside. We are expecting the market to move down. Okay, we are expecting bearish candles to take our market downtown. So when you see a hanging man, we are going to be expecting the market to move in the downside, or we are going to be entering for sell. Okay, so that's where we enter from these areas, anticipating the market to move in the down direction. Remember, when we are selling, we are moving down. When we are buying, we are moving up. Okay, those are simple patterns from the bearish side, or signal that the market is going in the sell direction. Okay, now, after a hanging man and a shooting star, we have the candlesticks here indicating that the market is going to be changing the direction to the upside, or we are expecting the market to move on the side of buyers. Okay, again, now we have a hammer. Okay, this is a hammer. The market will be moving down, and then from the downside, we have a formation of a hammer. We have a hammer from the downside. Remember, in our previous video, we talked about buying pressure. So when the candlestick is losing, when the bullish candlestick is losing a body from the downside, we left with a long shadow or a long wick on the bottom. This means that the market is going to be changing the direction to the upside. Now, this time, we are expecting to buy from this candlestick. So now, this is an indication that the market is going to be changing the direction to the upside. We are taking a buy from the indication of this candle. Enter for buy from this area, anticipating the market to change the direction to the upside. So this is a signal from the hammer. So from a hammer, we have another candlestick which has a small body on the low, which means that the market will be moving down, and from the downside, we will appear the formation of an inverted hammer, where we are going to be expecting the buyers to take the market upside. Or when you see this candlestick, this is a signal that the market is moving in the upside, or the market is going to be changing the direction to the upside. So we enter for buy from this area, enter for buy from this area by anticipating the market to move up. So that's how we get a signal from a simple candlestick patterns by indicating a buy or sell in the market. So we have a hammer. We signal that the market is going to be changing the direction to the upside, and even we have an inverted hammer. We signal that the market is going to be also changing the direction to the upside. We have a shooting star where the market will be moving up. By anticipating the market to change the direction to the downside, we have a signal from a shooting star. Okay, even from a hanging man, we have the formation of the candlestick, and then indicating that the market is going to be changing the direction to the downside, or we are expecting to be selling from that signal. So now let's move to the complex chart patterns, candlestick patterns, to see how are we going to be indicating buy or sell in the market. Okay, now let's start from a bullish side. Okay, we have an engulfing candle. Engulfing candle will appear with the formation of the first candle, which is a bearish, which is small, and even we got a next candle which is bigger than the previous candle, a bearish candle, which means that the bullish candle covered or engulfed the first candle, which is a bearish. So this time the market will be moving down. Okay, so from the downside, now we got a formation of a bullish engulfing, which indicating that the market is going to be changing the direction to the upside. We are expecting the reversal to the upside, which means that we are going to be entering for buy from this area. By anticipating the market to move up, we are expecting more bullish candles to move the market up. Okay, that is a signal from a bullish engulfing. Okay, from the bullish engulfing, we have also a bearish engulfing. So a bearish engulfing will appear when the market is moving up. Okay, we are making high highs and high low. Okay, from the high, we have the formation of the bearish engulfing, where we have a bearish small candlestick, which is covered by a big bullish, which gives a name of bearish engulfing. So now, when we see this candlestick, this is the signal that the market is going to be reversing to the downside. We are expecting to be selling from this area, from this candlestick, with anticipating the market to move downside. So from here, we are expecting the sellers to dominate the market. That's where we got a signal from a bearish engulfing. So after a bearish engulfing and bullish engulfing, we have also a bullish harami. Harami means the pregnancy in the Japanese language. So this time we have a candlestick where the market is moving down. Okay, we are moving down. From the downside, we have a formation of a bullish harami, where the first candlestick is a bearish and the next candlestick is a small bullish, which means that this big candlestick, which is a bearish, is the mother of the next candlestick. We are expecting the market to reverse to the upside. Okay, we have an entry from this area by taking a buy. We are buying from that area, anticipating the market to move up, anticipating the buyers to dominate the market. Okay, now after bullish harami, we have also a bearish harami. Okay, a bearish harami is from when the market is moving up. Okay, we are making high highs and higher lows. From the high, that's where we get a formation of a bearish harami. So this is an indication that the market will be changing the direction to the downside. We are expecting to be selling from this area. This signal that the market is going down. We enter from this area by anticipating the market to move down. So we are expecting more bearish candles as a seller's domination. Okay, now from the complex candlestick patterns, we have a bullish engulfing, we have bearish engulfing, we have bullish harami, and a bearish harami. So from this candlestick, those are the stronger candlesticks to be indicating if we are going to be buying or sell in the market. So there are also different candlesticks apart from these ones, but these are the stronger candlesticks that we can use in the market and are easily visible in the market. So from this simple candlestick and complex candlestick patterns is where we are going to be predicting or entering from to take a buy or sell in the market. So guys, remember, before entering the market with the confirmation of the candlesticks, okay, by taking a buy or sell, this is what you have to confirm before you enter with that confirmation. So now, let's say the market is moving up, remember that, making higher highs and higher lows. So remember, on the higher low, that's where we are going to be looking for buy. Okay, so you wait from these areas to be taking a buy. If you wait for the confirmation from this area, maybe this is a bullish, engulfing bullish harami or a hammer, there is a confirmation you need to wait for before you enter the market. So now, even from the uptrend to the downtrend, from the uptrend to the downtrend, you wait from the areas of lower highs. Okay, so from lower high, you are selling by the confirmation of the candlestick patterns. Okay, any type of the candlestick pattern, bearish engulfing, bearish harami, or a shooting star. Okay, so let's start from the side of sellers. Okay, let's say from here, the market is moving down. Okay, as you can see from high, we are moving to the low. So waiting from the areas to be selling from the high, you get an opportunity of a bearish harami. That is a candlestick pattern. That candlestick confirmation, it's not the only confirmation you have to enter with. So what you have to do is to wait for another confirmation. So first, you got a confirmation of a bearish harami, but before you get a confirmation of a bearish harami, this is what you have to do. You have to wait for the candlestick to close in any time frame that you are using to enter from. You have to wait for the candlestick, this bearish candlestick, to close to confirm that this is a bearish, which we give it a name of a bearish harami. So after that, with the confirmation, after the time frame, or let's take an example like we are in the 1 hour time frame. If 1 hour candlestick, this is a bearish candlestick, in 1 hour, let's say we are at 2:30 a.m. So the candlestick will be closing at 10 o'clock. So you have to wait until 10 o'clock if you want to enter from the 1 hour time frames. You have to wait for this candle to close. So at 9:30, it's not confirming that the candlestick will be closing as a bearish candle. You have to wait until 4 p.m. So then after that, you confirm that this candlestick is bearish harami. That's where I'm gonna be entering from. So remember, you wait for the next candle to open. Okay, after 4 a.m. the next candle will be starting. So if that candle start open, what are you going to be doing at that moment? Okay, what you have to do is that you need the candlestick. Okay, let's say we are opening from here. Okay, now let's say the candlestick opened from here. So now we need the candlestick before we enter the market. We need the candlestick to first make a high. What am I meaning by that? Is that I need the candlestick to be leaving a shadow on its top. Okay, I need the candlestick to make a high before we start moving down. Okay, so if the candlestick has a high with this wick, that is a confirmation that after making a high, this is how it's moving. After making this high of this wick of the candlestick, I'm expecting the market to be starting making a low by moving down, even breaking the previous low of the previous candle. So this is how you need to enter from this. When this candlestick has first made a high, when this candlestick starts making a low, by breaking the low of the previous candle, start from the low of the bottom of the previous candle and even the low of the wick of the previous candle. These are the lows. So after making a high, I'm expecting the market to be making a low by breaking the previous low of the previous candle. So now I'm expecting the market to continue even breaking the low of the previous candle and even breaking the low previous support of the bullish candle, so that now we are expecting the market to be continue with the bearish candlestick. Okay, so that is an opportunity you need to wait for. So which means that after making a high with the volume, we are expecting the candle to be continue with the low. And then I'm also expecting the next candlesticks to be continue in the downside. So then you enter from that area with that confirmation. So taking a look from these candlesticks, the market was moving down. So we waited from this area to be entering for sale. After the confirmation of bearish engulfing, the next candle first made a high. How? Because we have this wick. Okay, so after making a high, there is a high probability for the market to be continue in the downside. So I will enter if this candlestick start to break below the previous low of candle. I will enter from this area anticipating the market to continue moving down. As you can see, the market moved down. So that is the secret of entering with the candlesticks. After getting a confirmation, enter for sale after the candlestick made a high before we start making a low. When we start making a low, that's where I'm gonna be entering from when the candlestick starting breaking the low of the previous low of the candle. Okay, let's now move to the chart. On the chart, the market is moving down. Okay, so we made a low. From waiting for the lower high, we got a confirmation of a bearish engulfing. So now, after getting this confirmation of candle, we are going to be entering when the next candle start breaking the low of the previous candle. But before that, you need the next candle or the new candle to first make a high before we start making a low. So I will need a candle first making a high before we start making a low by expecting the market to continue moving down, and then I will enter when the market starting breaking the low of the previous low of this candle. After that confirmation, I'll be entering from this area, stop loss above the previous high, anticipating the market to continue. Okay, entering from this area, the stop loss is from this area. So now I would like to see the candlestick first making a high before we start making a low. So let's see what happened. So now we go to our target. So what I was talking about. Okay, this new candlestick, before we start breaking below the previous low of this candle of bearish engulfing, we first made a high and then we started making a low from where we entered from, which gave us a confidence that the market will continue in the downside. That is an opportunity you have to take with a strong confirmation of the market to be going in your prediction direction. Okay, so now let's move on the side of bullish. Okay, here we have the market that is moving up. So we are in the areas of reversal from the higher low. That's where we are expecting the market to be rejecting. After that, we wait for the confirmation of bullish candlestick to be entering from by taking a buy. Okay, so remember what you have to do here. First, if you are in the 1 hour time frame or any time frame that you are using to enter in the market, you have to wait for this candle to close. so that you can confirm that is a bullish engulfing. Okay, so after confirming that is a bullish engulfing, after closing in your time frame, you go ahead and wait for the next candle to open. When the next candle open, be careful about, you have to wait for this candle to make a low, okay, which means that the candle opened from this area, from this side, we open from here. So then we are expecting the market to continue to the upside. So now we first made a low with this low wick on the bottom of this candle. After that, we are expecting the market to break above this high of the previous bullish engulfing. Then we can be confident that the market will continue in the upside. And this is our entry for buy. Taking a buy from that area, the stop loss is below the previous low, anticipating the market to be reversing and continue in the upside. So you enter from this area and you anticipating the market to be reversing and continue in the upside after confirming that the candlestick first made a low. Then after that, we started making a high with the confidence that the market is gonna be continue in the upside. Okay, the traders were waiting the market to be making a low from this area, so then they got a confirmation of bullish engulfing from this area. The next candle first made a low before we start making a high, so this confirmation gives the market to be moving in the upside. Okay, so now let's take an example from the chart and see how can we enter from this confirmation. Okay, here the market is moving up. We got a confirmation of bullish engulfing again. This is an opportunity. The market is moving up, so now we got a confirmation from a bullish engulfing from this area. That's where we are going to be entering from. First, remember, you have to wait for the confirmation of the candle to close in your time frame where you want to enter from. Or if this candlestick is from H4 or 30 minutes, you have to wait for the 30 minutes to be closing. Then after that, you are going to be confirming that this candlestick will be closing bullish as you wish. So then after that, you need the next candle to first make a low before we start making a high. After that, you are going to be entering when the candlestick start breaking above the previous candle's high. So now we enter for buy from this area. The stop loss will be below the previous low, anticipating the market to continue in the uptrend. Our target will be from this area. So now let's see what the market is gonna give us from this. Okay, the next candle. Okay, first we made a low before we start making a high. You can see from this low. Then after that, we started making a high by breaking the previous highs of the previous candle. So now we are confident that the market will continue in the upside. So now let's see. We are moving up. Then we go to our target. So that's how you move on the side of buyers, with the confirmation of the candle making a low before starting making a high. Then after making a low, you enter from when the candlestick starts breaking above the high of the previous candle. So if you are a day trader or a scalper, this strategy is very powerful. You can use it. So guys, remember, as long as you are teaching this, you have to backtest before you use it on your real account. So guys, like the video, subscribe on the channel, leave the comment below, and we see you next time. Be safe.